Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets continue to trade with losses on the last trading day of the week. The Nifty looks for support at the 11,900 mark. Zee Entertainment recovers from the opening lows and is now the top Nifty gainer. The stock head towards its 200-day moving average. The Nifty IT index is the top sectoral loser. Infosys and TCS are your top two laggards on that index, contributing 30 points to Nifty downside. And in the press, the gas is trading with losses after Macquarie downgraded the stock, citing rich valuations. Good afternoon, Neeraj. Well, I guess it's the IT stocks which are witnessing profit booking today and dragging the Nifty lower.
Yeah, IT is down. FMCG is looking slightly weakish as well because the likes of HUL, etc. are correcting in trade. And banks haven't particularly looked rosy in the session. Maybe the end of the week profit booking session or the fact that we've not done as badly as the rest of the Asian screen and maybe some return to the mean of sorts. The banks too have corrected today, as I said. But get the heat map and you will see IT, you will see HUL and some of the FMCG names, non-index Colgate, the likes too have gone down in the session. And Bharti Infra too down about 5%. But look at the ones which are interesting. So like I said, it's not just IT. Infosys is down 3%, yes. But Asian Paints is down. There is 2.5% weakness in Asian Paints. There is weakness in HUL, about 1.5% down in trade today for HUL as well, trading at the lowest point of the day. And then Tech Mahindra, HCL Technologies, Wipro. So Nifty IT and consumption, the key sore spots today. What's done well is Zee, and we spoke about this in the morning. The quality of the buyers that has come in should attract people's attention. Add to that the fact that the free float goes up and therefore there would be continuous buying there, so it would attract money. 3.5% strength in Eicher Motors, some strength in the commodity names like Tata Steel and Vedanta, all of which is looking okay. But the market breadth, Devina, at least on the Nifty, still around the same levels that it was at the start of the trading day, even though we are substantially lower from where we were then.
Yeah, the market breadth also looks weak, Neeraj, after yesterday's session where you did see a little bit of a pullback. Again, in today's trade, you are seeing the mid caps and the small caps lose closer to 0.5%. This is the market breadth for you. So you've got 642 stocks advancing, closer to 864 stocks which are declining, and that gap just widens towards the end of the session. Let's talk about the individual stocks, and that will get you an idea, a fair idea of what the movers in the mid cap and the small cap space are doing. So starting off first with what's gaining, you've got Graphite India, which is up about 5%. JSPL is up about 5%. Godrej Properties, after a lull, has finally kicked back into action, so that stock's up about 3.5%. SAIL has moved up, and Exide Industry too, which is doing okay for itself. What's looking weak this afternoon rather, has been some of the IT stocks which have missed out, and even the larger names are looking weak. The likes of an Infosys with some downgrades coming in there. And in the mid-cap space, Emphasis is down, Hexaware is down as well, another 2% given up, and Edelweiss Financial Services looks weak by about 2.5%. Coming to the small cap space then, that's holding out okay. It's absolutely flat right now and at an index level, with individual stocks like Ujjivan Financial Services, which is up about 4%. Diwan Housing Finance is up 5%. Then you've got TV18 Broadcast. Remember, TV18 on the back of the news of Sony being interested has been active. Network 18 as well as TV18, both of them are up and active. Dish TV is up 2.5%. Losing out is Walcott, IRB Intra, Andhra Bank, and a few other names like Credit Access Grameen, which is down about 2%. Let's also get in a sense of what's been happening in the futures and options space. Navneet joins in for that. Navneet.
Thanks for that, Devina. Well, there are a lot of short positions today coming in for these IT stocks. So first, take a look at the Nifty as well as Bank Nifty Futures. Nifty Futures are not doing anything right now, but one thing which we were highlighting for the last two sessions was when Nifty was taking, there was some profit booking coming at the 12,000 mark. You did see the premium falling for Nifty Futures, and as you can see now, it's at 5 to 6 points. Bank Nifty Futures have been trading at a discount for the last 3 sessions now, and Bank Nifty has actually seen some bit of build-up of about 8 to 8.5%. It's not every day we talk about Nifty IT Futures, but pull up that one. There is volume which has come back here, 24% higher in terms of build-up, and this is definitely going on the short side. The movement that we've seen for the index and also for individual constituents of that index, there's a lot of selling pressure which has come by. On the options front, 12,000 call continues to sit with maximum open interest. Even the 11,900 call, by the way, in today's trading session has seen a lot of OI build up. In fact, 17 lakh shares have been added for the 11,000 11,900 call, while the 11,900 put, which is sitting with maximum open interest. Mind you, we've breached the mark today, at least for a brief period, but the put writers till now have not run for cover at the 11,900 mark. So it will continue to be as a very, very big support for the market going ahead. Watch out for that range of about 11,800 to 12,000 now. Individual stock futures, short build-up seen for Infosys, so watch out for that. Stock's down nearly 3%. It's been trading below all its key moving averages. I think the spot's also fallen below 700. Even the futures are trading below that mark. Z on the other side, second straight day of fresh longs on the futures side. Open interest build-up continues. And in today's session, technically on the charts, it's also touched its 200-day moving average. Finally, IGL, where short build-up has come about. It's an outperformer, by the way, on year-to-date basis. It's down for the second trade day, and also news supporting it that Macquarie has downgraded the counter to neutral from outperform owing to rich valuations, 8% higher in terms of open interest build-up.
All right, and that's what's active in the futures and options space. So we will shortly be getting our market expert joining in to give us a sense of what the direction could be like and how should investments be taken on the basis of what we've seen over the last few trading days. But just want to quickly look at a few other movers. And while we've been talking about the mid-cap space and the small-cap space remaining absolutely flat, PSU banks, which were up and active up until now, seem to be giving up in some shape and form. Siemens is the other one that's weak. I think this is the second or third straight day where we've seen some weakness coming in for Siemens, and this is down about 4.5%. The likes of an Emphasis from the IT basket is weak. That's down 4%. You've got also Jubilant FoodWorks, 1.5% under, and then some of these divestment candidates and the PSEs where there was a lot of interest ahead of the go ahead for divestment. That's all seeing some more profit taking in today's session. You've got the likes of an ITDC, Shipping Corporation of India, second day in a row is seeing some profit taking. I should also put up Concor to see what that stock's been doing. ITDC is down about 6.5%.
Okay, so watch out for these names. The sell-on news continues, and today accompanied by two of the slightly more defensive nature bets of the market correcting a bit in the session today. I just want to take one, before we get to our guests, just one quick look at what Europe is doing in the session today and what Dow futures are pointing towards in trade before we get to our guests, because we are down about 0.5% for the banks. The world markets are not looking all that bad. Keep that at the back of your mind. Europe is actually quite stable, and the US markets, which were soft a bit yesterday, are pointing towards some bit of an upside. So keep that at the back of your mind. The world markets are not looking all that poor in the session today. We have some idiosyncratic factors which are probably leading to these moves in trade.
Even the turnover, actually, it'll be interesting to see how the turnover has been shaping up. It's been volatile because a few days you've seen the turnover crossing 40,000. The average has been closer to about 38 odd thousand, and it looks like at the start at least it's a healthy number of about 25,000 odd. For the cash market side. But let's also bring in Rakshit Ranjan of Marcellus Investment Managers. He's joining us right now on the show. Rakshit, a very good afternoon to you. Let's talk a little bit more about what the call at Marcellus is in terms of any strategy change. I mean, you guys have been active with regards to some of these consumption stocks, looking at financials in a big way. What else?
So it's not so much a sector orientation that is a starting point for us. We want to pick up companies, specific companies, not sectors, companies which can deliver consistency of healthy fundamentals in good or bad times. It just so happens that India offers most of such companies in B2C consumption and financials oriented spaces. We do have one pharma company as well, Abbott is there in our portfolio, which is neither consumer nor financials. But the main construct and the main approach that has always remained, continues even now, is to stick to a portfolio which can deliver a very healthy earnings compounding over a consistently long and short period. So if you look at the second quarter, which was a September end 2019, the portfolio that we have, it delivered an earnings growth of about 14% on a weighted average basis, which is pretty much at the low band of outcomes that we expect our portfolio to deliver. So 14% in an environment, and this is PBT, by the way, this is not profit after tax. If you look at profit after tax, it's more like a 35-40%. I think more like a 40% in the second quarter. So with PBT growth of 14%, which is in an environment where I think Sensex Nifty PBT has delivered a -3 or -4%, if I'm correct. That sort of a resilience in a weak external environment is what we seek. Now, it's a separate matter altogether that in the current year in particular, thanks to the tax rate cuts, the profit after tax for our portfolio companies in the first half has gone up by about 40%. And in the entire full year as well, it should go up by somewhere around 35% ±5. So with that sort of a profit after tax growth, despite the fact that our portfolio has done 18, 20, 22% type of a return over the last 6-7 months, I think we are with a very good fundamental support on valuations in our portfolio, and that's where we keep backing the companies in our portfolio.
Rakshit, the last 1 month has seen a bit of a return to risk. I know your long-term portfolios, or if you have a really long coffee can strategy, it doesn't need to alter too much because there is a bit of a return to risk. Are you guys making any opportunistic bets? Something which was beaten down, but there could be a cyclical or a valuation-led up move that could happen because of the return of risk?
No, we are not taking any such bets. We like to be boring. We like to stick to quality. Quality by definition is 20% earnings compounding over 2, 3, 4 years or longer, even in a tough environment. So if we take risk, I mean, our view is that because we don't know how to time these risk on, risk off type of market events, if we take risk, I think we'll jeopardize a lot on the overall offering that we want our clients to get. And the overall offering is not just a healthy return, it's also a very, very low risk, very low volatility, right? So if we start doing that, then obviously it increases the risk in the portfolio without any commensurate increase in return, I think. And hence, last 1 month, we've not done anything. We don't think without earnings support, risk on type of things can continue for too long.
Rakshit, so then for a stock like Z Entertainment, which was under pressure because of promoters pledging shares, now that overhang is out of the window. Fundamentals of this company, according to a lot of brokerages, they've said that it's intact. These are some external matters, external factors which are weighing on the stock. So you may not comment on Z, but would you look at companies like these now where the overhang is going out of the window?
Again, no, and the reason is, see, it's not really overhang around, let's say, doomsday scenario happening or not happening to a stock. For us, if there is robust fundamentals and there was some sort of an overhang around that robustness, which goes away, we are happy to look at it. Let me give you an example. So. Let's say something like a Page Industries, right, which is in our portfolio, because predominantly there was a massive channel financing issue, and hosiery retailers as a channel sits on a much longer inventory cycle, much longer working capital cycle, and hence the channel financing matters a lot to them. And they're also actually exposed to a lot of unorganized products in the basket of products that they sell. So combination of both longer inventory days and exposure to more unorganized at a shop level for a hosiery store. Something like a Page Industries underwent a significant moderation in volume growth, earnings growth. Now, that sort of an overhang will certainly be there on a share price if we believe that the underlying beauty hasn't got diluted. Which we continue to believe in this case, then we might, we might increase our allocation a little, or we continue to buying. That's what we kept doing on Page Industries. We continued buying the stock. But other than that, a struggling franchise, and I'm not commenting on Z, I'm not commenting on any other specific name, I'm just saying in general, a struggling franchise, if the overhang around a doomsday scenario goes away, and if it doesn't become a consistent compounder, quote unquote, as in it doesn't become a monopoly which can't be broken down so easily, then there's no point in our philosophy to look at that sort of a stock just because an overhang went away.
Rakshit, just wondering, the tail risk of maybe a couple of financial institutions imploding and dragging the markets along with it seems to have receded a bit. In your research, do you guys, or when you are looking at things around, do you guys sense that as well, or are you still cautious about that possibility and therefore the impact on the markets coming about?
It's the latter. We are cautious about that possibility. When we look at the ground level situation, we don't see the financial crisis getting over as yet. So I won't say that the situation today in terms of the financial crisis at a ground level is any better than what it was a month ago or 2 months ago. So in that sense, we remain very cautious of the possible deterioration in the credit quality of various types of lenders given the current situation. However, we are exposed, we keep buying every day three BFSI plays, 2 banks and 1 NBFC that we have in our portfolio. The main reason for that is, to begin with, these companies are flush with liquidity on the liability side of the balance sheet. They are not witnessing any pressure on the asset side of the balance sheet, and most importantly, once the financial crisis bottoms out, then these companies will have the greatest ability to press their foot on the accelerator and increase loan book growth in areas where they're confident that not only is the asset quality robust as and when they lend, but more interestingly also there's a very low probability of incremental deterioration in asset quality. So once that confidence comes in that the external environment is not likely to deteriorate substantially from here on, I think the 3 lenders that we have in our portfolio, they will step up on loan book growth, and negotiating power being very high in a post-crisis era is a common trend that we've observed for the great quality lenders in 2007-8 or 8-9 type of a crisis, in 1997-98 type of a crisis. And if you look at the 10-year-old crisis, the 20-year-ago crisis, in the aftermath of the crisis, it's not the firms which could have imploded which benefited the most after the crisis. It's actually the firms which had the highest amount of liquidity access on the liability side and the best capability of running a high quality asset profile, which benefited the most in the post-crisis era. And that's what we are waiting for. That's where we're hoping to see in our 3 companies that we are exposed to.
Rakshit, just one last question on this conversation. Do you feel that there is any sort of a contrarian trade that exists in the current market situation?
Sorry, contrarian?
In the sense which is not a consensus trade, something which is probably on the brink of something
contrarian trade.
Yes.
I don't know which trade is quote unquote contrarian per se, but let me give you a couple of examples where it is non-consensus. So last 6 to 9 months we've had a consumption slowdown in the economy, where at least in the first half of the last 9-month period there was a perception that the entire consumption slowdown is because of lack of demand, right? So there were reports that 5 rupee biscuits are not selling, and there were reports that no one wants to buy cars anymore, etc., etc. I think the contrarian trade which someone could have made and we did make was that the bulk of this this problem that we've seen in the last 9 months, not entirely, but the bulk of it is because of channel financing issues, and hence wherever, let's say, you had no channel intermediation. So a couple of examples being, let's say, retail players, right? Retail players, the likes of Trent, D-Mart, and there's a long list of listed retailers. Retail players who don't rely on third-party channel intermediation, or let's say something like an Asian Paints, a Berger Paints, where there's only one single layer of channel that too sits on a few hours of inventory rather than a few months of inventory.
Right.
In such a case, we've not seen a moderation in volume growth and revenue growth. So that's a contrarian trade which has played out, I think, will keep playing out, and similar example. So buying HDFC Bank or Bajaj Finance today, I think, is a contrarian trade because the consensus will be that financial crisis is still ongoing.
Yeah, or maybe that the valuations are just looking all too rich. But Rakshit, good having you as always. Thanks much for taking the time out, and doesn't matter if it's boring as long as it's delivering returns. Keep that up. Well, what is delivering returns is Telecom. Now, a couple of positive news stories have headlined for the telecom sectors. The 2-year moratorium on spectrum charges, along with incumbents deciding to hike tariffs, and then Reliance following suit, led to a spurt in share prices. However, Fitch Ratings believe that these moves are not enough to offset the impact of the Supreme Court judgment on AGR dues. Let's get in Nitin Soni to talk about that, Matt, and his thoughts on the same. Nitin, good having you. Thanks for joining in. Neeraj here. Good afternoon. Why are these moves not enough, and are these not merely starting points in what could possibly be some more measures that could come about?
Yeah, thanks for having me on the show. So what we have said today is that, there have been two recent developments. One is all three telcos announced in the last few days that they are going to increase tariff effective from 1st December. They didn't announce the quantum of tariff increase, but they said they are going to increase tariff. The second is the government, the Cabinet of Secretaries announcement on 2-year moratorium of deferred spectrum liabilities. So while these are good, positive, announcements, but these are not enough to offset the regulatory dues, the impact on the regulatory dues on Bharti and Vodafone Idea, given the regulatory amount which they need to pay for the AGR-related number is quite large. Bharti has provided about $5 billion of liabilities, and Vodafone Idea at a slightly lower amount. So these are large numbers, and Vodafone Idea clearly is in a financial distress. Management disclosed that they have been struggling to pay some of the bank loans, and their EBITDA generation has been falling. So we will have to see whether these telcos may likely file a review petition in the Supreme Court, and whether government intends to provide more relief to the sector, which could alleviate the pressure on the balance sheet of incumbents especially.
In fact, I was going to come to that with regard to review petition. According to you, since you've been tracking this space so closely, how strong is this AGR case to seek a review?
See, first of all, I think both incumbents may file a review petition very soon in the Supreme Court. And because the other party is the government, which is clearly there are some intentions to provide relief to the sector. There is an evidence that they have formed the Cabinet of Secretaries to think of providing relief to Bharti and Vodafone Idea. So we'll have to see how this pans out. Whether Supreme Court takes a view of reconsidering its decision, or maybe waiver of some part of the interest or penalties, or there could be a deferment of the payment of this whole AGR dues over 10 or 20 years. So we'll have to watch out, how this plays out for Bharti and Vodafone Idea.
Also, Nitin, your thoughts on the tariff hike that all the three companies have now announced. Of course, Bharti and Vodafone have said they will be hiking tariff from the month of December. Jio has not given any timeline as of now. On an average, how much price hike do you see coming from these telcos?
Yeah, so I must say this is one of the game-changing moment in the sector. I mean, I don't think in the last 20 years we have ever seen tariff increase in the sector. Tariffs have always declined for all the telecom players in the sector. This is the moment where all three telcos, even BSNL, coming out and saying that we will increase tariffs. So, just back of the envelope calculation, we estimate that if there is a 10% tariff increase, the revenue will increase by $500 million each for Bharti and Vodafone Idea. Reliance Jio will benefit more because they have larger subscriber base of about 355 million subscribers. While these businesses have high operating leverage, so it means that the EBITDA growth will be higher. So the EBITDA growth would be $200 to $250 million and higher for Reliance Jio. But having said that, we will have to see how much tariff increase can all these telcos push for. This is really difficult to forecast because, as I said, I mean, this is one of those moments which has never happened in the sector. So we'll have to see whether they push for 10% or 20% or 30%. But I must, summarize that, there is no affordability issue right now in because, as we know, that India has one of the cheapest tariff in the world. So even if the average revenue per user, which is on an average is about 120, it goes to 140 or 150. I think consumers can still easily afford it. Is still one of the cheapest market in the world.
Nitin, just purely on the basis of the fact that on the basis of the AGR dues, does the balance tilt in favor of Reliance Jio versus the other two operators, and would then that become the bigger point of focus? In also the fact that you've got most of these, both of these companies, Bharti Airtel and Vodafone Idea, are under a lot of debt stress. Bharti Airtel has been constantly talking about the fact that they want to bring down their debt, but so is Jio. But it's still a bigger plus for Jio than the other two.
See, definitely, Jio is in a very good position. They have done phenomenally well in terms of market execution. I think it's fair to say that we have not seen in any other market in the world where a new market entrant in a matter of 3 years become the market leader. In terms of the subscriber addition, they are still gaining about 6 to 7 million subscribers a month. They have already garnered about 355 million subscribers. We expect them to have about 375 to 380 million subscribers at the end of December. Their revenue market share, we believe, would cross 40% mid of next year. So it's a story of a very good market execution, good distribution strategy, good offering, and a large network capacity they have. So I think they will continue to win market share, mostly at the expense of Vodafone Idea, while Bharti has been holding on to its revenue market share.
The other point obviously being that, while Jio has said that they are going to be moving in tow with what the other two operators have spoken about, increasing tariff hikes mostly on the bundle plans, they've also taken the indirect tariff hikes of about 12% by passing on the IUC to the final end consumer. So in that sense, they have, taken it one step forward. Do you see, but they're still one of the cheaper players in terms of tariff plans compared to the other two. Do you expect a lot of subscriber migration then happening from the other two operators to Jio?
No, I think customer migration is anyway happening from Vodafone Idea to Jio, while Bharti has been, in certain months losing and in certain months gaining. So they are kind of holding on to their subscriber base at about 279 to 80 million subscribers. We expect this trend to continue, that slowly and gradually Vodafone Idea losing market share, and Vodafone Idea might have their revenue market share lower than 30% in the next 2 quarters. So I think that trend will continue. IUC impact, in my view, would be minimal because Jio is offering larger data packs at the same time while it's charging 6 paise to its customers. So in my view, that will be neutral to Jio's strategy.
Nitin, just last question before we thank you. Fitch has a negative outlook on this sector. Let's say hypothetically, if there is any sort of relief, any sort of relief can be either waiving off AGR or it could be a moratorium of, like you said, 10 to 15 years. If that comes about, relief on the AGR front, would that change your outlook on the sector?
Yeah. So we were positive on the industry and we were saying that, this is an industry where the tariff has bottomed out and tariff did increase and Bharti Airtel last 2 quarter performance have been on an improving trend while Vodafone Idea's revenue and EBITDA has been declining. So I think we kind of forecasted the market right, but then this regulatory shock of AGR dues came, which created a lot of uncertainties and negativity in the sector, and that's why we revised the outlook to negative. But yes, if there is a resolution and there is a relief coming from the Supreme Court or the government related to AGR dues, whether it's related to the waiver of certain amount or deferment of the amount, this could have the potential to revise our outlook back to stable.
Okay, Nitin, we leave it at that note. Appreciate you joining us and taking us through your views on the sector, and that's the telecom space. By the way, it's remained in focus throughout this week. But on to some stock-specific updates. Reports suggest that the government may look to sell BPCL stake in other listed entities. The move may help the government to garner 7,200 crore rupees in the form of dividend and taxes. We've got Somit Sarkar joining us with more details on that. Somit, it's your lucky day. It's Friday, but for the time being, we're sticking to BPCL.
Well, yes, if you see, BPCL owns a stake in 3 listed entities, that is Indraprastha Gas, Petronet LNG and Oil India. Now, in IGL, it owns close to 22.5% stake, in Petronet close to 12.5% stake, and in both these companies, it is a promoter of both of these companies, and in Oil India, it owns only 2.5% stake. And this possible stake sale is the only reason why these stocks are trending down in trade today. Most probably, these stake sales would happen through an offer for sale route where it might be offered at a discount to investors, and hence the overhang that we have been seeing in the share prices today. Now, currently, the combined value of this BPCL stake in these listed entities is close to 11,800 crore rupees. Now, BPCL could distribute this amount as dividend to shareholders, including Government of India, before the government sells its stake in the company. So, if we remove the dividend distribution tax by back calculating, then the company could actually announce a dividend per share of 45 rupees, which would be the highest ever in the company's history. Now, this would give the government close to 7,200 crore rupees in form of dividend and taxes. So in short, government will not only earn money by selling stake in BPCL, but also through dividends and taxes that it might get by selling from BPCL in form of dividends.
So Amit, just follow up this pressures that we're seeing on these names. What is it that you think, or what do you think people are telling you about the pressures on Petronet, IGL, etc.? Can they continue, or would it be a one-off move?
Well, if you see, fundamentally, there is nothing wrong happening with Indraprastha Gas, Petronet LNG or Oil India. It's just an overhang of the stake sale that will remain on the share prices, and that's the reason why they're trending downwards. If you see IGL's chart, off late it had run up nearly 50% in the last 3 quarters, and that's the reason we are also kind of seeing some kind of profit booking, plus this overhang of BPCL stake sale, because 22.5% coming out on the market, it has to be at a discount, and that's the reason we are seeing this kind of an overhang on the share prices of all the 3 companies.
Okay, Somit, we'll leave it at that. Thanks much for taking the time out and giving us that. So that's Somit Sarkar with the reasons and the rationale why some of these stocks are correcting. But yep, IT, consumption, the top 2 drags in the session today. Let's talk about them and more with Amar Singh of Angel Broking. He joins us right now on the show with his sense of the charts. Amar, good having you. Good afternoon. Thanks for joining in. How are you approaching trade today? Seems to be a weak day because it's not just banks, but IT and some consumption names like Asian Paints, HUL, all of which are correcting.
Yeah, that's correct, because overall what we are seeing is that there is some selling pressure in these stocks, and also technically if you look at them, clearly shows that there is some sort of topping out pattern. And also, if you look at Nifty in particular, on the daily charts, there is bearish divergence on the chart, so clearly reflecting that higher levels are being sold into. But yes, too early to say that the trend has changed. So, but yes, one definitely needs to be slightly cautious at the current levels.
Okay. So just before you get to specific stocks, Amar, just a word on how do the charts of Nifty IT look today?
Yeah, looking at Nifty IT, what we see here is that Nifty IT continues to be weak. If you look at it from a long-term perspective also, I'm talking on the monthly charts and the weekly charts, they clearly show that there is selling pressure, or there is pressure in most of the counters, and that is being reflected in Nifty IT. And also, if you look at Nifty IT, what happened was that on 23rd October it witnessed a sharp up move, and then again it rallied towards 15,600 odd levels, and from there it has corrected to 14,000, around 15,000 levels. So there is some sort of consolidation happening, and higher levels will definitely be sold into, because there is weakness on the charts, on the weekly charts, and the weakness is significant. So what it effectively means is that on the downside, somewhere around 14,500, 14,600, that is a crucial zone of support immediate for Nifty IT, because if that is taken out, then we could see some significant further correction towards 14,000 odd levels. But yes, the trend, I would say, remains negative for the Nifty IT.
Okay. Brajesh Singh of Stock Access is also joining us on the show this afternoon. Brajesh, a quick word on the index, and then we take individual stock calls.
Good afternoon, Devina. See, this 11,900 is being acting as a trend decider, and there has been the fighting going on within bull and bear. If anyhow, if we are closing below the, say, 11,850, there might be a correction of, say, 150 points. And if we are giving closing above 11,980, then chances are that we might retest the 52-week high. So at this juncture right now, the bulls and bears are fighting, one thing. Second thing, on the daily charts, 12,040 to 12,045, the double top bottom, the double top formation has been there. But the only negative part is that the traders have made the negative divergence. They have made the lower high, so which is indicating the trend might drift to the lower end. But the important part, or the strong part, what I have been witnessing for this momentum is that the base has been shifting from 11,700 to 11,800, and now it's been shifting towards 11,850, or say 11,900. So till that 11,850 doesn't give closing below that, we should assume a buy on dip strategy. So playing on that basis, if Nifty spot trades below 11,900, or say somewhere around 11,880 to 11,885, one can go long with a strict stop loss of 11,850 and play for the target of 11,980.
Okay. Let's talk about individual stocks then. Amar Singh, why don't you start off?
Yeah, I would say the first one to look at is HDFC Limited. HDFC is technically, I would say, continues to be strong and positive on the charts, be it the long-term charts, the intermediate-term trend. Short-term on the daily charts, yes, we are witnessing some sort of consolidation, but today the stock is almost up by 1%. So this is one stock one can look at buying around 2,210 levels to 2,215 levels. And the stop loss is 2,147, and the target is 2,330 on the upside. And the second stock to look at is from the sell side, and that is Asian Paints. What we are seeing in Asian Paints is that the stock, after the significant rally, the stock did manage to make a high of 1830 in the first week of November, but from there it has corrected and currently trading around 1684 odd levels. Technically, it is, I would say, it has breached a major support on the weekly charts. So that reflects that there could be some further downside to the stock. So any pullback can be used as a shorting opportunity in Asian Paints. So any pullback towards 1695, 1700 odd levels can be used as a shorting opportunity. with a stop loss of 1733 and a target of 1635 in the short term.
Okay, so those are some stock-specific ideas coming in from our technical experts. I just want to pull up. Okay, we still need to take stock ideas from Brijesh. Your individual stock picks, Brijesh, for this Friday afternoon would be?
Good afternoon, Amit. See, I have a one buy call and one sell call. Now, my buy call is on an MGL. The stock had been seeing a rally from a level of 750 and it moved up to the level of 1040 or 1044 or level, and now it's been witnessing a little bit profit booking. So still the oscillators had not given that much of major negative sign in it, and still they are giving a sign of a reversal. So somewhere around 1010 to 1012 if it trades, one can go long with a strict stop loss of 990 and play for the target of 1050. And another call which is on the sell side is Bharti Airtel. Now on the daily chart, if the candlestick formation was a evening star pattern, which generally indicates when the trend on the higher side has been there, and from there the reversal comes up. So it has formed the evening star pattern. Now when I have posted the call, that time it was been trading somewhere around 422 or say 423, and if I'm not mistaken, right now it's been quoting somewhere around 419 or say 420 around. Still it's been looking bearish. Present rate or any rise till 424, one can go short with the stop loss of 434, play for the target of 410, and if we are giving closing below 410, then another say 10 to 15 rupees on downside can't be ruled out. Now both the call can be hold for a 4 to 5 trading session.
Okay, that's MGL and Bharti Airtel sell call coming in on these stocks. Pull up Jindal Steel and Power. It's gone up 4 to 5% in today's session. It's trading somewhere about 142, and the gains have actually come in the last half an hour or 1 hour of trades. Something like Motherson Sumi. Remember, we highlighted the stock yesterday. In the last 1 hour, there was some selling pressure which came in. The stock closed with cuts of 7%. I think it's recovered majority of its yesterday's losses. Now that's sitting with gains of 5%. Some buying coming in for Motherson Sumi at lower levels, and RBL Bank this week has gained about 8 to 10%, and right now the stock's sitting with gains of about 4 to 4.5%. Amar, coming on Jindal Steel and Power, JSPL, which is trading with gains of 4 to 5%. The stock's been quite active in the last 1 month. Looking at today's move, would you advise taking any bet?
Yeah, I would say that if you look at Jindal Steel and Power, what we are seeing technically on the charts is that the daily charts are clearly indicating consolidation. Weekly charts are strong, but monthly charts, it is going to run into very stiff resistance around the highs, recent highs, which it had made around 152, 153 odd levels. So I would say that anyone long should definitely look at booking profits, because till the time we don't see the stock sustaining above 155 levels or so, there could be selling pressure in this stock. On the downside, now the stock has got decent support around 130 levels.
Okay, in fact, just Motherson Sumi, that Amit was highlighting, also comes into the focus list of Morgan Stanley along with an ITC today. So that's probably one of the reasons why you could see that activity on the stock, which has moved up on 9.5 million shares at 128. Deepak Shenoy of Capital Minds also joining us on the show right now. Deepak, very good afternoon to you. Talk us through what you're doing at this point with regards to a very stagnant market.
Very good afternoon to you as well. Thanks for having me on the show. The markets, I think at this point, there's a bit of fatigue after all of the news that seems to have come in, and then there's a bit of, I think, over bullishness in some sectors, which should get moderated. I think some stocks are run up a little too much. On the other hand, a lot of the mid and small caps haven't moved at all, or in fact have shown, have fallen despite having shown fairly decent results. So a bit of a dichotomous market. A lot, I think, is depending on the events that seem to be what people are waiting for, including a cut on personal taxes or an impact on personal taxes, or any other announcement with respect to this telecom AGR announcements, which might cause a lot of cash flow issues. We've seen one, but I think that's relatively minor, but I'm looking at a bunch of others as well. The cabinets, the parliament is on, so I'm expecting a lot more to happen in the next few days, and that's probably going to drive markets. So I would take action on as things happen basis, rather than just say that it's time to go bullish or time to sell everything and go home. So just be careful of over bullishness in a few stocks. Unfortunately, we own them also, and we're struggling to make decisions on whether to continue to hold or to pare down positions ourselves.
What are you doing now with some of the usual suspects in the beaten down spaces? We talk about autos, auto angs. Suddenly it looks like IT has lost flavor. So what would you do now in some of these spaces?
So IT, I think overall might actually come back to attractive levels to purchase. I don't feel there's a big problem medium term. Short term, there could be some immigration issues and so on. But medium term, I don't think there's going to be a major issue. So if they come back to more reasonable levels, I would definitely buy or be a buyer in some of these stocks. We don't own a lot of them, and perhaps hopefully they'll come to better prices. But a lot of the others, for instance, in auto, I feel the recovery is going to happen. I mean, we've had a 1 year, 1.5 year kind of bunched lack of sales or lack of purchases. And that doesn't really last too long. We've got 1 crore people turning 18 every year. That's 1 crore people in need of mobility. And if there haven't been much sales in the last 1 year, 1.5 years, that's going to mean there'll be 2 crore people who haven't or who are looking for mobility. And at that point, at some point, the cycle is going to turn. What we haven't seen happen yet is a fall in interest rates for retail. I think that is where I think RBI's next move should hopefully focus on. And if we are actually able to see a transmission of rates down, the economy will actually benefit a lot, and auto will start to move up when rates start falling. Auto is very, very dependent on rates, at least not the two-wheelers, but at least four-wheelers and commercial vehicles. And two-wheelers will also have a sentimental impact. So I think going forward, rate cuts or rate cuts that are transmitted to the economy is what will impact it. Even today, we are seeing more than 2 lakh crores being parked by banks back with the RBI instead of on lending. So there is, there is a tremendous amount of fear in the economy in the banking system. So I'd wait for that to happen while we get back into. I'm staying put in autos. I'm actually buying some more because I believe in the next 5 or 10 years, these stocks will give us considerably better returns from now.
Deepak, good afternoon. You mentioned that there seems to be some over bullishness in pockets. Is Telecom a part of that, or are PSUs a part of that?
I think both. Telecom, again, we own 2 of the 3 players, so I shouldn't be, saying this. But I think things have run up a little bit too fast. There's a feeling that, okay, everybody will be able to either raise prices, and raising prices is fine, but this 25-30% they talk about is too little. I think prices need to double before a lot of these guys get seriously profitable. I think the pecking order here is Jio, Airtel and Vodafone. And the bullishness in Vodafone I really can't understand because they are staring at a cash flow deficit of over, I think 10,000 or 11,000 crores in February. And I don't think they're going to find it easy to raise money in the debt markets. Their debt to equity ratio has just jumped from 2:1 to now 4.5:1. At 4.5, can you raise more debt? I don't know, especially when both promoters are telling you that they're not going to put any more equity into the company. Bharti is at a much better stage, of course. Their debt to equity ratios are more controllable, and the promoters there, I think, are more willing to put in more money if it's required. And of course, Reliance has kind of stated that, listen, we're making profits. Why should we even be worried? And so, it's a bit of a pecking order over here. So there is that problem that, that this problem, stocks have gone up so much. And I think a lot of it is sentiment. But then this market is weird, So Jet Airways continues to trade at some price. I don't understand. And, even DHFL, which the RBI is saying that we'll probably go into liquidation, continues to trade at a fairly large positive price. I don't understand that either. So I would very much avoid Jet Airways or DHFL. Public sector banks, I think they have some reprieve because of the SR resolution and the hope that more resolutions will come and therefore no more capital will need to be added. But of these, again, the pecking order is State Bank, which is doing really well from a financial perspective, and Bank of Baroda, because the combine has been merged already, so they have a little bit less in terms of merger banks. The rest of the pack is going to face a lot of merger banks. So while they've been beaten down a lot, and we can argue that yes, maybe the worst is over for some of them, I still think until we've seen a growth back in credit, we are not going to see a lot of this reverse very fast. So I'm just a little worried about the fact that some of these stocks are run up so fast.
Okay, and we're also seeing profit booking for most of these stocks which have rallied in the past few days, be it a couple of these PSU banks or for that matter the telecom stocks. Pull up Eicher Motors, that's also one of your top gainers in Nifty. That's seen gains of almost 2 to 2.5%. And RBL, we just highlighted the stock sitting at the highest point of the day. Some upgrade coming in for Exide. I think Goldman Sachs has upgraded the stock and you're seeing some positive moves. They've given the target price of almost 230 rupees. The stock's at 192, 193. Brijesh, on the charts, Exide, does it look interesting?
See, Navneet, if I look about the Exide chart was had been trading in the range, downside somewhere around 186, upside somewhere around 192, 193. Now the chances, what I have been witnessing for a very short time, is that the range has been broken on the higher side, and stocks indicates with the volume followed by the oscillator that stock can jump to the level of 204 to 205, whereas on the downside 186 would be the support which should not be broken. So for a very short-term trading is been concerned, one can look out to buy with a strict stop loss of 186. Look for the target of 204 to 200.
Seems to be some problem with the audio. We'll just fix that. But we were also talking about RBL Bank. Amar, on the charts, with the move that we've seen for the stock this week, I think it's up about 8 to 10%, and it's been trading above its 50-day simple moving average. It's an underperformer, of course, on year-to-date basis. But looking at the moves in the last 5 trading sessions, would you take a bet here?
Yeah, RBL Bank definitely it has breached a crucial resistance zone, and on the daily charts also it is showing positive momentum. And the weekly charts have also turned positive. Some of the indicators have turned positive. So yes, any dip in this stock can be used as a buying opportunity. Ideally, now if you look at it, the stock has got now very good support zone coming around 325. The levels also. So ideally one should have a stop loss below that level, and on the upside 385, 390 is where one can look at booking profits in this particular counter.
All right. Just come to you, Deepak, on some of these new listings. You've got Avas. Obviously, it's not a new listing. It listed in October 2018, but it's doubled since then. Then you've got Affle India. Then you've got IRCTC. Then you've got India Mart Intermesh. You've got Metropolis. You name it, and the stocks are up, except for Sterling & Wilson, obviously. And then now you have a new one coming out, which is CSB, a bank. Again, the pricing looks slightly expensive compared to some of its peers, but nonetheless, the appetite is there. It's a smaller issue. What's your take on some of these IPOs and these newer listings, and whether or not they've just run up too fast too soon?
To be honest, so we own some of them, so I won't complain that they're going up. But something like, for instance, an IRCTC, the fundamentals actually changed after the IPO because they introduced this 15 rupee or 20 rupee charge per booking, online booking, and they book about 30 crore tickets. So if you consider an average of 15 rupees also, that's a 450 crore revenue for a company that in the previous year showed a profit of 280 crores net profit after tax. So just taking the ticket revenue that will come in, extra ticket revenue, we're talking of a fairly large jump in earnings. So there is some, justification for the price to jump up a little, but so a lot of the others also, I think a lot of Apple as well, I think they did a complete restructuring after the IPO, brought the international arms, which were, I think, earlier held partly by the promoter and all sorts of things, back down into the listed entity. So now the listed entity actually owns all of the foreign subsidiaries as well. So there's some kind of action over there. And I think negative action has happened in Sterling and Wilson, where we've had a promoter saying that I can't pay you back what I was supposed to pay you back through the IPO proceeds. So in some ways, some of this has been fundamental, but in others, it's a bit of a chase. So CSB as well, I think people are saying, listen, we like this promoter, but we don't know very much about the bank, because the bank itself was actually a very big favorite of a community, because it was run by that community in Kerala, and now it's not. Therefore, what happens? Does the loyalty continue? Does the metrics continue to hold? It was loss making, I think, till last year, and is only now starting to see some elements of profit. So you can build it up on a price to book value and say it's fairly decent. But time will have to say about whether that will be a better bet, or whether you should just wait for the listings of the Ujjivan Bank or Equitas Bank, where I think the ratios are better and the profitability has been more well tested across the last few years. So I think it's not a time to actually argue about fundamentals so much, but to just, I guess, participate in the IPOs, because maximum you can get is one lot. So your relative, how much ever money you can make out of it is actually going to be dependent on how much money you put in it after it lists. So at best, I think this is just a participating in a lottery, hoping that you'll get allocation. And if you lose money there also, it's not so much, because maximum you invested is like 10,000-15,000 rupees. The real thing will be about how it comes up after listing and what kind of fundamental changes are there. That is important to track. So, right now, if I were to say an advice, it's like, if you're okay with losing a little bit of money, go ahead and apply for the IPOs. If the real money will have to be made by betting on them after the list.
Since you mentioned Ujjivan, I actually, since they've already got the approval to go ahead with their IPO, though we don't have the timelines yet, but it could be any time soon. Do you think that there's going to be enough and more appetite for Ujjivan, small finance bank, and then what happens to the holding company?
That's a very good question. So the holding companies are different. I'll answer that separately. But here's what's happening to the bank. The bank's at a 2,000 crore book. They're raising, I think, 1,200 crores is what they've said. All that money will be fresh capital into the bank. The new book value goes to 3,200 crores. If you pay 2x book, you're paying for a market cap of about 6,400. And I think they're looking at a price of 35 or 36 rupees per share, which is roughly 6,000 odd crore valuation. So there's not much left on the table. However, what this does is it opens up two things. First of all, RBI will take back one of the big problems, which is that the bank had to be listed. So some of the restrictions that may have come or have already come will go away. They will still need to have the promoter down to 40% in another 2 years, which means 2019, now 2020, by 2021, the promoters will have to come down to 40%. The promoter is the currently listed company called Ujjivan Financials. So in order to do that, either the promoter has to sell shares in the market, or the bank has to issue new shares, or they have to do some kind of a unwinding procedure where they say holders of equity shareholders of the listed company that is currently listed will get automatically some shares of Ujjivan, some kind of demerger/merger proposal. This hasn't been accepted earlier by RBI or SEBI, and I don't know if it will be acceptable now. So the problem with Ujjivan, I think the Ujjivan Small Finance Bank is an interesting buy. It will be a long-term bet. I don't think we should expect fireworks from it right now, but because of their high capital ratio requirements, they're not going to be high ROE companies for a while. So we shouldn't think of them as a 4x book, 5x book kind of companies. Banks, we should think of them as a 2x, 2.5x at the max kind of bank. So, but there's a lot of potential. They're in very favorable geographical territories. and they have access to less of the baddish loans that the other banks have. So there is potential scope for growth. The holding company, on the other hand, which is the only listed entity right now, has a problem because if you want to own the bank and all that the holding company does is own the bank, you will actually shift over to the bank. Why will you hold the holding company? And the holding company will trade at a discount. Today it trades at around 3,000 crores of market cap. Even if you assume you did all the calculations around, so much issue, 2x market cap, my market cap will go down to, my holding will go down to 80%. I see that a company like this should trade at a 50% discount to the market price of the holding of the bank, which would actually entail a 20-25% fall from here of the holding company. And this is necessitated by two things. People who hold the holding company will shift over. They will sell the holding company, move to the bank. And secondly, there is a problem in actually transferring any capital gains to shareholders because you have to pay dividend distribution tax, you have to pay capital gains tax. So anyway, you lose some 25 to 40% on just the transferring between recovering money from your holdings to giving the money to shareholders. So you should trade at a 40 to 50% discount anyhow. So I feel this is not a great time to be in the holding companies, but the banks are a different bet, and we'll see when the DRHP comes out how good the banks are. But in my view, the banks' financials are already open, and I think they're probably reasonable bets to take.
Okay. Deepak, stay on. There's a couple of other pockets where there is some excitement, and I want to check with you about what would happen there. And of course, we'll do some chart checks with both Brijesh and Amar as well. But let's first find out what's made it to Sharad Dubey's list of the Fab 4 stocks of the day. Johnson with that. Sharad, good afternoon.
Good afternoon, Neeraj. The first stock is NTPC. The stock is up more than 2.2% after Morgan Stanley's upgrade came to overweight, from equal weight, with hiking the target price to 152 rupees. The fixed cost under recovery is reducing and the impact of regulation is known. Apart from this, the risk-reward ratio seems favorable as the brokerage is stating, and the steady commissioning should drive the earnings. Up next is Equitas Holdings, which is up almost 2.9% after we have seen fresh longs and a high open interest of almost 9%, with volumes trading at almost 1.5 times its 20-day average. Now, the next stock is Godrej Properties, which is up almost 3.5% after it has snapped its longest losing streak since its listing. So this losing streak lasted for 9 days. And the last stock of the day is SL Propack, which was up almost 1% right now, hitting its 52-week high today itself, and also rising for the 5th straight session. So these were the Fab 4 stocks of the day.
Thanks a lot for that. Sharad, so those are a few names that you need to watch out for. Just want to give a couple of statistics. 1 hour into trade, I also want to get stocks which are off from the high point of the day or above the lowest point of the day. So those statistics will come up on your screen. But if you can get the European indices up firstly, and then the change in the market breadth, if any, and the turnover picture currently. So this is what Europe is doing. Still in the green. FTSE is higher, but CAC and DAX have just come off from where they were about an hour ago. Keep that at the back of your mind. So the European markets have cooled off. The Dow futures too were up about 0.28%, now just about 0.17%. So a bit of a cool off in the world markets. The turnover steady. We've added only 4,500 crores, not too much. So just about 29,597 on the NSE cash. So just keep that at the back of your mind. And the market breadth, well, actually doing better than what it was maybe an hour ago. Okay, what's moving and what's not from among stocks? I want both a technical and a fundamental view out here. But first, the technical view. Brijesh, coming on Z, for somebody who initiated longs yesterday, book profits or stay long?
See, I would be suggesting better to book profit at this juncture of time, because on the higher side, the stock has a resistance at 365 to 368. So better to book profit in it. And suppose someone wants to go for a fresh long, then I would be suggesting any dip to the level of 330 to 335, one can go long with the stop loss, strict stop loss of 322. So at this juncture of time, better to book profit and be away from it.
Okay. Fundamentally, Deepak, is a bullish call on Z Entertainment from these levels on warranted, or does the sharp uptick kind of discount the near-term positives that would have that would come in?
There's two things here. Firstly, we have to understand about what the 5% or 2%, whatever the residual promoter holding is, that what does it entail? You can't have a promoter with just 1 or 2% stake in the company, operate the company with the same kind of vigor and passion as they did when they had 25, 30, 40%. So there is a problem to think about if the promoters only own that much. And there's a fear that the fundamentals will deteriorate because of this lack of ownership, whether it is because there isn't as much interest in running the business as there is in pursuing perhaps a strategic sale of the business. Time will tell. So that's one fear. On the other hand, I do believe that my personal feeling is that I think the promoters continue to be interested. There may be other ways of having interest in the company, and things may change dramatically. What would be the best alternative for Z would be an actual sale, a strategic sale by all the holders who currently bought this from the promoters. All these shares that have been bought can be sold to a strategic investor who can then take over and then kind of run the business, which is a very, very good business. So from this perspective, the more that this delay happens between finding a strategic investor and the current situation, I think it will see some kind of fundamental deterioration in the company. The next quarter might still be okay, but I see that there's a problem in the future. So I hope nothing worse bad happens. I hope I'm wrong, and I hope that the promoters are now in a stage where they'll be compensated enough to run this properly. But I continue to be skeptical about whether the fundamentals will continue to look good. Also remembering that last time they told us that they gave 170 crores of Z's money to promoter entities and forgave it. That means they let it go. It's a loss. This is quite meaningful as an amount, and if more such revelations come, that the fundamentals are deteriorating, and then I would say get out. So I won't even get in at this point on a fundamental basis. And I personally feel there is a lot more fundamental news to come on this stock in the next few months, and that should determine the course of action. Right now, I'm just skeptical. I don't feel this is this is great enough for this company to earn. I hope to be wrong. I know that when I'm wrong, I'm going to just get up and say I was wrong to be skeptical, but right now I remain that.
Okay, and the stock of Z has actually come back to levels where it used to trade when the Oppenheimer deal was announced last time, when the promoters sold the stake at 400 rupees to Oppenheimer. They already have existing stake. In fact, in yesterday's block deal also, one of the subsidiary of Oppenheimer bought another 2 to 2.5% stake. The stock of Z continues to be higher, but what else is moving higher are the metal stocks. We did mark Jindal Steel and Power a while back, but I guess it's the entire pack which is moving higher. Nifty Metals Index is up about 2 to 2.5%. JSPL is sitting at days high. You've got stocks like Steel Authority, Tata Steel, and primarily, by the way, these are all your steel companies which are going up, because we've not, JSW Steel is also up about 1% to 1.5%. Non-ferrous, Hindalco, Nalco have not seen that sort of moves. Let's see if there is any sort of development which is coming around the steel sector at the time being. Hindalco, actually, they've also started to inch higher, both of them sitting at days high. Amar, on the chart, would you take a bet, considering the move that have just come by in the last 10 to 15 minutes of trade, for any of these metal companies?
Yeah, I would say that Tata Steel looks positive on the charts. We are seeing that on the daily charts it is moving out from oversold territory. On the weekly charts, the stock is positive, and some of the indicators are definitely indicating positive momentum. And on the monthly charts, I would say that it is moving out from oversold territory. So clearly reflecting that yes, there could be some upside to the stock, but one needs to watch out that the recent high that was made on 4th of November of 421, 422 odd levels. So now that should act as a very crucial resistance zone. So ideally one can look at entering the stock. Now the stock has got very strong support coming around 380, 83, 82 odd levels. So ideally, yes, this is in a trading range with a positive bias for Tata Steel.
Okay, Tata Steel up 4 to 4.5%. Deepak, a tricky space to be in because the sector gets impacted what happens globally too. And of course, back in India now, we've got a new steel player. Arsenal Mittal will be making its foray into India. Is there any company or for the space, any view here?
Well, I think here we don't have any, we're actually not interested in steel right now because of these factors that you mentioned. Two things really is, this is not one of those times when steel production in China is falling. The last 2 years, we saw the winters create severe restrictions for steel plants within China. I don't think the restrictions continue to be as severe or in anywhere close. So production worldwide is going to be relatively high. So I don't see a shortage creating an issue in creating a price jump in the prices of steel. Now, secondly, with more production, there's going to be more supply. And so a good portion of steel consumption, at least in non-auto pieces, will continue to go, will continue to be supplied or supplied well. I don't, in both cases, see this as a good thing for steel companies going forward. Plus, with interest rates not having really come down for a lot of them within India, and I don't feel that this is a great time to kind of buy a significant amount of these stocks. Though some have corrected substantially, Tata being one example, and I just feel there's more to go before a turnaround happens. You should get in at the first signs of a turnaround, but I think that's another 3 to 5 months or 6 months away before we see some kind of fundamental turnaround in these stocks. So not interested in steel. Maybe the aluminum space, we might see some action. Most of the metals companies go through cycles, and I'm not very close to the cycles here, but I know that if you're a steel player, you should be very aware of these cycles and keep talking on the ground to people in the steel industry to understand when the cycle is turning. It doesn't seem to be right now, but I'm not the best person to answer whether that turn has already happened, and we are not investing.
Okay, got that. Deepak, it was great getting your thoughts on the show this afternoon. Thank you so very much for joining us. Also, what's doing well is Network 18, and the stock's up about 12% yesterday also. When Bloomberg news of Sony being interested came about, the stock had moved a similar amount. It's once again up by 11%. SAIL, JSPL, we spoke about all of these names. And Lakshmi Vilas Bank, once again, another 5%. Amar, before we let you go, any top call of the day, your closing idea?
Yeah, I would say that HDFC Limited continues to hold firm in the market, and in spite of the selling pressure we are seeing in the indices, this is one stock which is up by almost more than 1%, and technically also it continues to be extremely strong on the various time frames. So one can definitely look at HDFC Limited, so in the range of 2210 to 2215. With a stop loss of 2147 and a target of 2330 on the upside.
Okay. We let you go on that note. Amar, thanks very much for joining us on the show this afternoon. All right. Bringing in another expert opinion. Business cycle is no more than a chronological series of events. That's the word coming in from Martin Pring of Pring Research. In an interview to BloombergQuint earlier on today, Pring turns focus to technical charts. Says identifying one's position in the cycle was important for allocating assets during inflation or deflation. Listen in to a slice of that conversation.
The business cycle is nothing more or less than a chronological series of events. And the three financial markets, bonds, stocks, and commodities, all fit into that chronological sequence. And if you can figure out where we are in the cycle, then you can allocate your assets much more efficiently, either in inflation-sensitive stocks or deflation-sensitive stocks.
Okay.
So here's a diagram, and it's basically showing you a theoretical business cycle with a contraction on the left and a recovery on the right. First thing to happen is that bonds bottom out as the Federal Reserve or the central bank, whatever it is, starts to ease up on pump liquidity into the system.
So sorry, I just want to, for the clarity of our viewers, just mention this. The BSNC is bonds, stocks and commodities?
Yes, thank you. Thank you. I should have mentioned that.
No, that's okay. So now if you can please explain to us, because even I'm interested in knowing what is it trying to imply.
First thing that bottoms during a bear market or during a recovery, the contraction, is bond prices, bond yields peak. And then of course money goes into the system, and people in the equity market begin to anticipate the next recovery. So that's why you see S at the bottom when the news is blackest, when it's really, really bad. And then as time goes on, the players in the stock market are rewarded because we do get a recovery, and that gives you a chance to have commodities to rally. So at that point, everything is going up. And the next thing to happen, of course, is that the economy does take off a little bit, and demand for credit picks up, and therefore the price of credit, interest rates, also starts to bottom out and go up. But because profits are going up at a faster pace than the interest rates at that point, stocks can continue to rally. And they finally peak when the news is at its best, at the top of the cycle. And then as we roll over, so eventually commodity prices start to peak as well. So we've got this sequence of events that takes place throughout the cycle.
So according to you, what part of the cycle are we in currently?
Well, you see that green shaded area on the diagram there. That tells you where we are in the current cycle. Perhaps you could put that up again. So what we've seen a rally in stocks since last December. And the next thing to look for is a bottom in commodity prices. We don't see that bottom yet, but it could be very close, because commodities, industrial commodities, are very oversold at this point.
I wonder if you have a view on India, Martin, on the headline indices, and if you've looked at any sectors within India. I do not know if you have or no, but if you have, can you tell us about that?
I've taken a very cursory glance at, because I don't have the data to work on. I have in the US with breadth data and all kinds of stuff like that. But what I have noticed is that the automobile index, the CNX Autos, looks kind of interesting right now. It looks like it's bottomed out. And I'm also watching metals and commodities as well, because they're tied into the global cycle, and if the global cycle turns up, these will be places to look at.
Okay.
What is interesting, though, is the technology, which I would have thought would have done well at this point, is starting to roll over a little bit as it stands right now. And of course, things can always change, and if they do, we have to change with the markets. But right now, the commodities look more, the technical area looks a little bit, the IT looks a little bit vulnerable.
You're talking about the Indian IT index looking vulnerable?
India, yeah, the CNX IT, yeah.
Okay, so that looks
I'm not going to go bearish on it, but it doesn't look as attractive as, and the consumer as well. The consumption index looks pretty interesting.
Interesting by that, are you mean that it's topping out, or does it look like it'll show some signs of revival?
No, when I say it's interesting, I mean it's interesting from a bullish point of view.
Okay.
Yeah.
So probably, going neck and neck with what consumption in US is.
Yeah.
So
yeah, exactly. And if you look at some of these Indian sectors and you adjust it for the currency, they move very, very closely to what's happening in the US to the equivalent sector.
Can you elaborate a bit on that? You're saying stripping out of the INR or the rupee rate differential?
Well, if you take the financial CNX financial index, for example, and you compare it to the XLF, which is a financial thing, ETF traded in New York, adjust it for the currency, there's a very, very close relationship. Now, the magnitudes differ, but the cycle, the highs and the lows are pretty well very, very similar. They differ a lot. They differ a bit, but there's a definite connection you can see when you adjust it for currency, whereas you're looking at local currency terms.
And since you mentioned currency, I actually wanted to get your view on, how does all of this play out for the dollar? Do you track? Would you be able to give us an idea on how the dollar?
All I can say about the dollar is that it's in a bull market until proven otherwise. And one of the things I look at is its relationship to its 12-month moving average. At the end of last month, it was right on the average. So I don't have a really strong opinion because it could snip through the average this month. But I see the dollar at this point as it being in an uptrend. But if we get some negative influence, some negative indicators taking place, then I'll be a little bit more concerned.
Because that's also a function.
Right now, as it stands today, I'm bullish on the dollar on a long-term basis.
All right, let's take a look as to what's happening in the dealing rooms, or rather what the dealing rooms are recommending today. Darshan Mehta joins us with his channel checks. Darshan, over to you.
Yeah, so one of the stocks that's been spoken about today is Axis Bank. It's trading rather weak in today's trade. It's down close to 1%. Dealers indicate that at higher levels, FIs are selling. The counter has actually corrected meaningfully over the past few days. So Axis Bank is one of them. The other one is Cadila Healthcare, which is down over 1%. There are concerns over the delay that the company is having because of Doxil. That's one of the key drugs that they wish to launch. Some of the dealing rooms did indicate that they could be a potential complete response letter that the company could have gotten on the drug. So there is concern. It's down in trade. And finally, one stock which has done well over the past few days is Affle India. Dealers indicate that at lower levels, some of the HNIs are actively accumulating, trading close to record highs. So this is something that dealers are watching out for.
Okay, thanks a lot, Darshan, for bringing that dealing room check. I just want to pull up IDBI Bank. It shot up in trade. In fact, the gains are quite sharp, which has come in the last 10 to 15 minutes of trade. As you can see on the screen, the stock's trading with gains of about 17%. No major news has come by. Just off late, of course, they had sold their mutual fund business to Muthoot Finance. The valuations of that one is also not being disclosed to the market right now, but the stock definitely seeing some buying momentum. It's sitting with gains of about 17 to 18%. Just 10 minutes to go for markets to shut shop. Let's get you some closing strategies. Brajesh, any BTST or any STBT for Monday's trade?
Navneet, I have 3 calls. 2 are on the sell side and 1 on a buy side. Now, the first call for STBT is SBI. Now, the SBI has been trading in a very narrow range, on a downside somewhere around 328, 329, and on the higher side 332, 333. Is not able to cross the 334 odd level, whereas the indicators are indicating the downward slope. So one can go short at the present rate of 329 with the stop loss of 334. Look for the target of 324 or 322. Second sell call is on Havels. The stock had given closing below the daily chart on the Bollinger Band, which indicates more pressure would be continuing. So somewhere around 640 or 638, the stock has been quoting. One can go short at the present rate with the stop loss of 650. Play for the target of 628 or 624. And on the buy side, only one call which is looking good for a BTST is Bank of Baroda. Now, the Bank of Baroda has been trading with the narrow range, but the positive sign is the oscillators are making the higher lows formation, which indicates the probability that it can shoot up in coming days. So 99 somewhere around the stock has been quoting, keeping a strict stop loss of 98. One can go buy on it with the target of 101.
Okay, Brajesh, any thoughts on IDBI Bank, which is shot up in trade?
It looked promising right now because the indicators are making the high lows, and after a very long consolidation in the range of 28 and followed by 36, stock has given a breakout. Immediately it has a resistance at 40 rupees 85 paisa. If we are surpassing this level, then the stock can even jump to the level of 44 rupees. Whereas on the downside is being concerned, 37 rupees 50 paisa should be the stop loss. So as we are talking, the stock has even moved to the level of 40 rupees 10 paisa around. So 37 rupees 25 paisa or say 30 rupees 50 paisa should be the stop loss. Look for the target of 44 in coming days.
Okay, it's locked in upper circuit now, gains of 20%. In fact, the volumes too have picked up in the last half an hour of trade for IDBI Bank. It's trading at 40.1 right now. Let's also discuss Titan, which has been trading weak right from the time it's cut its guidance for the second half of this calendar year. In fact, if you look at the technicals now in today's trading session, of course, the fall is just 1%. The stock's come off from those levels of 1375 that we had seen before the earnings. The stock's fallen below its 200-day moving average in today's trade and is taking support at 50 DMA. Brajesh, on the charts, considering it's below the simple 200-day moving average, do you see more downside for Titan in the coming days?
See, if you remember, I have been presenting 200 simple moving has a more weightage in the trading point of view. Now, what I've been witnessing is that the stock after a couple of days back, when the gap down opening has been there, 1175, 1185 are the resistance zone. Till stock not been trading above this range, selling pressure would be continuing. So right now the stock has been trading at 1135. Any rise till 1145, one can go short with the strict stop loss of 1175. Whereas on the downside has been concerned, I'm looking stock touching a level of 1100 or even 1090 can't be ruled out.
Okay. The other stock is Eicher Motors. Just pull that out. right now, because that's the top gainer on the Nifty 50 at this point, and that's the highest point of the day. 22,924, and this one has made a creeping recovery, but nonetheless it's been a smart one. Come off the lows that we've seen. Not a very heavily traded stock, but nonetheless, Brijesh, would you take a trade on Anisha?
See, Devina, the stock had made a base recently at 21,200 to 21,350 band, and after that it has shot up. Immediately, stock has a resistance at 22,400 to 22,450. If we are able to surpass this range, then 1,000 to say 1,500 means I am talking about 24,000 to 24,400 target can't be ruled out. So definitely one can go long with the stop loss of 21,000 around. Look for the target of 24,000. Only the minor resistance which I have said, that should be kept in mind.
Okay. Just in September, in fact, the stock was at about 16,000, closer to those levels. And then from there, it's just been on a one-way journey upwards. I mean, you did see a few bouts of profit taking, but nothing that brought it back down to those lows. So it was an incremental positive that kept coming in for Eicher Motors.
Well, 3-month highs or 4-month highs for Eicher Motors, at least the last 3 months, 47%. Quite a remarkable move. Blue Star is gaining in the session today, so some upticks there on that stock. Intraday, the intraday chart would be interesting for Blue Star. Look at that sharp spike there, 5% higher. And eClerx Services, in addition to IDBI, is trading up 20%, so really good going. Last query from mine, at least, to Brijesh, and that's on the two media names, Network 18, Television 18. Network 18 is up about 11.5%. 2 days on a trot now, I reckon this stock has done well. Any thoughts here?
If we talk about Network 18, then the stock had made a base at 19 rupees, also 20 rupees, and after that it has moved up. Even the stock has surpassed the previous swing high that were of 27 rupees with the volume. So chances are that stock can move up. Anyhow, if dip comes, keep a stop loss of 27, look for a buy side again. Whereas on the higher side, it's been concerned 33.5 to 34 would be the first hurdle to watch. If we are able to surpass this level of 33.5 or say 34 rupees, then the stock can even jump to the level of 37 in coming days.
Okay, let's start wrapping up the markets. Brijesh, stay on. We'll take in closing thoughts from you. Not the best of days. We spoke about the possibilities of this happening in the morning. Not that it's possible to predict the market, but there were some telltale signs in the way some of the stronger stocks had broken down yesterday. And today the banks too have corrected, IT's corrected, some consumption names have gone down, and therefore it's not looked all that great. The mid-cap and the small-cap indices and the market which shows some signs of strength towards the second half of trade, and those have not done too badly. So they've been reasonable. At least the mid-cap index ending in the green, ever so marginally, but in the green, or looking like in the green. There's still about 2.5 minutes left. And we'll talk about that too. But first, the large cap pockets. Eicher Motors, 4.5. The metal names have done really well today. So Tata Steel, JSW Steel, Vedanta in the green. Z Entertainment about 3.5. NTPC and ONGC from the PSU pack doing okay. HDFC's lent a bit of a support to the market. Will be among the top contributors in the session today. What's not done well, aside of Bharti Infra, IT and consumption. So Infosys, TCS, Asian Paints, HCL Technologies, there is Wipro, and then Tech Mahindra down there, and Britannia too about 1.5% lower. So some of these names have looked slightly wobbly in the session today. I must say, watch out for Kotak Bank. It's had a few days of weakness in this week gone by. But Navneet, what about the broader end of the spectrum?
Well, Neeraj, there were a lot of individual movers, in fact, because the broader market slightly outperformed the benchmarks today. So Motherson Sumi, which fell nearly 7 to 7.5%, saw some bit of recovery. Of course, it also featured in focused list of Morgan Stanley today. And metal stocks in the second half started to pick up, and specifically your steel companies. So Steel Authority, Jindal Steel and Power, both of them saw strong gains, and both these stocks are closing almost at the highest point of the day. Ujjivan Financial also saw good gains. In fact, throughout the session, despite of markets turning weak, we did not see any selling pressure coming for this stock. It's closing with gains of about 4 to 4.5%. IDBI Bank, last half an hour, it had a big move coming on account of good volumes as well, and the stock's been locked in upper circuit with gains gains of 20%. In fact, this week itself, the news came in that the bank has sold its AMC business to Muthoot Finance, the valuations of which are unknown. E-Clerks is the other one from the broader markets. It's an underperformer this year, down almost 50%, but some buying seen at lower levels in the stocks, also closing above the mark of 500. RBL Bank, what a move this has had, just not today, but for the week it's gone up, and finally it's closing at day's high mark, which technically is viewed as a positive sign, so 8% higher for RBL Bank. On the losing side, Gayatri Projects, second straight day of lower circuit. Remember, there was some downgrade which came in with regard to rating here. It's an over-leveraged company which has been trying to pay off its debt, 10% lower. Siemens is the other one which didn't have a great session today. Some selling pressure coming around this stock as well. I think right from the time they came out with the numbers stating some margin pressure, the stock's been trading lower. Tejas Network, which was moving higher, saw some profit booking today, so that stock's cooled off about 7%. Corporation Bank, so these are all your counters which were moving higher, are witnessing some profit booking, 6% lower for Corporation. And MGL also cooled off today. The stock's down, or rather closing with cuts of over 2%.
All right, so disappointing close to the end of the week. We are almost 100 points away from that 12,000 marker that was a touch and go on quite a few occasions during the week in intraday trade, but not managing to surpass that level. Nifty Bank today lost about 215 odd points, with the Sensex giving up another 200 points, and 11,916 is the close on the Nifty 50. It's the end of the week, so we're quickly looking at how the weekly performance has been for the index. Absolutely flat, but unlike last week, which was flat with a negative bias, we're flat with a slight positive bias this week. Z Entertainment is the top gainer this week, and primarily on the back of the move from yesterday as well as from today. Sun Pharma has moved up by 8.5% this week. Eicher Motors, IndusInd Bank, Bharti Airtel too doing well. Remember, Bharti Airtel still near its 52-week highs. Dr. Reddy's and Cipla. So Pharma as a pocket actually didn't do all that badly this week. What lost out? Autos, banks look slightly weak. So Kotak Mahindra Bank, IT as a pocket, Wipro was down, Hero MotoCorp and Asian Paints gave up some in this week.
All right, that's the Nifty constituents for you. Let's also take a look at the Nifty Midcap 100 index and see how slight bit of outperformance, marginally closing in the green, up by 0.4%. Your biggest gainers there were Aditya Birla Capital, up 24% for the week. IDBI Bank closed with upper circuit today. I think majority of the gains that you're seeing for that one have come in just on Friday. Glenmark also had a good week. So Pharma as a pack, as we were mentioning, have been doing well in the last few days. RBL Bank, Oriental Bank of Commerce, and these are all your PSU banks, and that was the theme. Union Bank, which went up for the week. On the losing side, you had Allahabad Bank, which did not do well. Bombay Burma was down 8.5%, and among your traders' favorite, I guess, Bata IGL, which has been trading at its 52-week high, saw some bit of profit booking, and also something like Torrent Power, Oil India were down by between.
Edelweiss actually, that gave up after seeing that big move, that rally, that sustained move that we saw in the last week or two. That sort of fizzled out this week. But closing comments, Brijesh, what is it that you're going to be watching out for come next week?
See, Devina, if we talk about Nifty, then as I've said, this is this 11,900 would be acting as a trend decider. Now, downside important support to watch on a closing basis would be 11,850. It should not be broken, or it should not be closing below this Nifty. Whereas on the higher side, 12,070 to 12,080 band would be acting as a resistance. So I'm still thinking there would be a fighting going on with bulls and bear at this juncture of time. Whereas the other indices been concerned is Nifty IT is looking weak. Chances are that we might drift towards the level of 14,750 if we are not able to surpass 15,150 or say 15,200. Then Bank Nifty has been looking weak to me. Chances are that in coming days, might be in Monday or Tuesday, Bank Nifty might try to touch 30,800 if we are not surpassing 31,400 mark. Only the auto counters as well as the metal, these indices are looking promising. So 50-50 chances are there for the indice Nifty to outperform in coming days.
All right, Brijesh, we'll let you go on that note. Thank you very much for joining us this Friday afternoon, and have a great weekend. All right, and on that note, it's also a goodbye from Neeraj, Navneet, myself, and the entire team that's put this show together for you this afternoon. Thanks so much for watching. Have a great weekend.